In this video, we're going to focus heavily on macroeconomic behavior because what's happening now isn't just about short-term price movement. It's about how liquidity moves, how capital rotates between asset classes, and why XRP and crypto may be setting up for something very different from what we've experienced over the last couple of years. Hey guys, welcome back to Whiteboard Crypto Update. In today's video, we'll talk about XRP. So, be sure to stay focused as you surely don't want to miss out on this. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads. This video is for educational purposes only. It is not financial advice. Always do your own research before making any investment decisions. Let's first take a step back and understand where we've been. Since late 2024 and moving through most of 2025, the cryptocurrency market has mostly traded sideways or slightly downward. However, despite that, crypto prices are still significantly higher than they were before 2024. This tells us something important. Even in a very difficult economic environment, crypto has managed to hold ground. XRP stands out even more in this context. XRP moved from roughly the 20 to 30 cent range all the way up near $3. Since then, price has pulled back sharply, but even after being cut in half, XRP remains far above its previous levels. That type of performance does not happen by accident, especially in an environment that has been extremely unfriendly to risk assets. A major reason XRP was able to outperform is new demand. Products tied to crypto exposure, regulatory clarity in the United States, and improving fundamentals unlocked capital that simply didn't exist in previous cycles. XRP benefited heavily from this, even while the broader market struggled. Now here's where macro becomes critical. Over the past few years, the United States economy has largely been in a contractionary phase. One of the clearest indicators of this is the Purchasing Managers Index, or PMI. PMI readings below 50 indicate economic contraction, while readings above 50 signal expansion. From late 2022 through much of the recent period, PMI stayed below 50. Historically, this environment is terrible for crypto. Crypto is a growth asset. It performs best when the economy is expanding and liquidity is increasing. When the economy contracts, money typically flows out of risk assets and into safer places. That's why it was surprising to see XRP and a few other major cryptocurrencies perform as well as they did. But if you look closely, most of the crypto market actually didn't perform well. Outside of a few top names like XRP, Bitcoin, and Ethereum, many assets stagnated or declined. XRP created the illusion that crypto as a whole was healthy, when in reality, macro conditions were suppressing the broader market. At the same time crypto was struggling, gold and silver were exploding upward. This makes sense. During contractionary periods, investors move capital into defensive assets. Precious metals, money market funds, and treasury instruments benefit when fear and uncertainty dominate. Over the past couple of years, that's exactly what happened. Now here's the key shift. Recently, PMI has moved back above the 50 level. This may not sound dramatic, but historically, it's one of the most important signals for crypto. Every major crypto bull market has occurred during periods when PMI was expanding, not contracting. When PMI flips from below 50 to above 50, liquidity conditions improve and risk assets tend to benefit. At the same time, PMI turned positive. Gold and silver appear to have reached exhaustion points. If you compare Bitcoin against gold and silver, a very clear pattern shows up. Whenever gold and silver peak relative to Bitcoin, crypto markets have historically been near bottoms. Right now, those ratios are sitting at levels that previously aligned with major crypto turning points. This reflects investor behavior. During uncertain times, fear pushes people towards safety. Gold and silver become attractive. But when confidence returns and economic activity improves, that capital begins rotating back into growth assets. Crypto, including XRP, fits perfectly into that category. Another long-term pattern reinforces this idea. Across multiple cycles, gold has often reached all-time highs shortly before crypto markets begin major expansions. Gold tends to peak when fear is highest. Crypto tends to thrive when innovation, liquidity, and growth return to focus. Recently, gold reached extreme levels again. Historically, moments like this marked rotation rather than continuation. That doesn't mean gold collapses overnight, but it often means leadership changes. The past few years were confusing because crypto performed better than it should have given the macro environment. This happened because of powerful one-time catalysts. ETFs, regulatory clarity, legal resolutions, and institutional involvement allowed assets like XRP to perform despite negative macro conditions. Now something different is happening. The macro itself appears to be shifting. Economic indicators are improving. Growth-friendly policies are emerging. Liquidity conditions are stabilizing. These are the environments where crypto historically thrives, not struggles. There's also a technical comparison worth noting. In early 2017, XRP experienced a severe liquidation event. Price action looked weak, sentiment was terrible, and many believed the market was finished. Shortly after that period, XRP experienced one of the largest expansions in crypto history. More recently, we saw another major liquidation event. After that, prices pulled back again and sentiment turned negative. While history never repeats perfectly, markets often rhyme. Extreme pessimism frequently appears near transitions, not endings. The key point here is not prediction or hype, it's context. Market transitions rarely feel obvious in real time. They usually feel uncomfortable, confusing, and discouraging. What matters is whether underlying conditions are improving, and right now, many of the macro signals that historically supported crypto expansion are beginning to align. Interest rate expectations are changing. Economic activity is stabilizing. Capital appears less interested in pure defense and more willing to explore growth again. When macro data, historical behavior, and fundamentals start pointing in the same direction, it deserves attention. What we may have just witnessed is the final phase of a long contractionary cycle. If that's the case, the next phase would naturally favor growth-oriented assets over defensive ones. XRP and crypto are positioned directly in that transition. For the first time in a long while, macro trends, historical patterns, and market structure are aligning instead of conflicting. If this alignment continues, the environment ahead may look very different from the one investors have experienced recently. Sometimes markets don't move because of what's happening today, but because of what's quietly ending. And if the contractionary phase truly is behind us, that alone could explain the recent behavior we've seen in XRP and the broader crypto market. Well, guys, that's all we have for you today. What are your thoughts on XRP? Get involved and let us know in the comments down below. If you guys like this video, then be sure to give this video a big thumbs up. Thank you for watching.